Hello and welcome to the Our Prenup Lawyer podcast, where you and I get to learn more about prenups as I interview professionals from the fields of family law, couples counseling, and wealth management. I'm your host, Libby Garabedian. Let's get started. The information provided in this podcast is prepared by Our Prenup Lawyer for informational purposes only and does not constitute legal advice. The information is not intended to create an attorney-client relationship. This is not legal advice or a substitute for obtaining legal advice from an attorney. A person listening or watching should not rely upon it in any manner without engaging professional counsel. The podcast is intended to communicate general information and, because recorded, may not be current. On this episode of Our Prenup Lawyer, I'm joined by Tami Wollensak. Tammy is a certified divorce lending professional and a divorce mortgage specialist with over 25 years of experience in the mortgage industry, helping individuals navigate the financial complexities of divorce, especially when it comes to decisions about the marital home. She works closely with attorneys, mediators, and financial professionals to craft mortgage solutions that align with the divorce settlements, promoting clarity and long-term financial stability for her clients. Tammy specializes in comprehensive divorce mortgage planning, home equity division strategies, and mortgage qualification assessments, guiding clients through every step with confidence and ease. Her mission is to empower divorcing homeowners with the knowledge and tools they need to make informed decisions and move forward with financial security. Welcome, Tammy. Thank you for being on the podcast.
Thank you so much for having me, Libby. It's an honor.
Of course. I would love to jump in and get started asking you what you do as a certified divorce lending professional.
Great. That's a great question, and one that a lot of people don't know or understand. As a mortgage professional, I've been in lending for, let's just call it 30 years. I think it's somewhere around there. And I really realized that there's a big gap between family law and lending. And a lot of times, if there's a marital home involved, there's a lot of decisions that need to be made prior to signing a settlement agreement, and a lot of projections and a lot of numbers that need to be crunched. And so, as a certified divorce lending professional, I help both parties sometimes, or one of the people that are interested in keeping the marital home. What does that look like post-divorce? Can you qualify for what you're setting out to do? And does it make good financial sense for you post-divorce? So we look at all of those things prior to signing any settlement agreement or agreeing to anything.
So how did you get started in this field?
That's another great question. I went through a divorce myself about 10 years ago. I personally tried to keep my marital home, and it was way too much home for me. We were a dual income family. And just like a lot of moms, you want to keep your kids stable. You don't want to move or uproot your children. So you try to do everything you can to stay in the house. In the house itself was very expensive. And when I, stayed in it post divorce, I realized it wasn't just the mortgage payment that was causing me so much problems. It was all the maintenance and things that I didn't account for in the marital home. And I'm in Illinois, so there's snow removal, fall cleanup, gutter cleaning, changing out the furnace from summer, winter to spring, all the things that come along with owning a piece of real estate, I had to pay for on my own. And it was super expensive. And I realized, wow, why didn't anybody tell me this? And so after that realization, I understood from being in lending that a lot of mortgage people weren't really clear on lending guidelines. It's a kind of a subset of guidelines that a lot of lenders really don't want to deal with. They just want to get your settlement statement post divorce. And if you need to do something, they're going to tell you. But a lot of times I was getting settlements of people that signed up for things that weren't able to carry them out. And I was like, wow, this is a big problem. From the legal aspect of things, you can sign up for something and get through the legal system, but it doesn't necessarily equate to whether or not you can carry it out financially or if you can qualify to do what you set out to do. So, understanding what that means so that it can, create a positive outcome for both spouses, really. Because if you're deciding whether or not you're going to keep the house and you're going to do a buyout, you want to make sure that that other person is going to get the money, right? That they were expecting and in the timelines that you guys have agreed to. And that's really where I was seeing a big disconnect is timelines, whether or not they qualified and whether or not they were comfortable with what that mortgage payment was going to look like post divorce.
It's excellent that you're unfortunately have these personal experiences, but that you're able to use them to inform your practice and help others.
Yeah.
Now, I want to touch on buyouts and discussing, now when people are no longer a dual income household. But first, I want to ask you, how long does your involvement last in a typical divorce when you're working with clients?
Sometimes years, Libby. Sometimes if somebody is coming to me, sometimes they're coming to me in contemplation stage, right? They're afraid of what's going to happen with their house, where they're going to live, how that's going to look, what they need to do. And there's never a too early time, right? Because if we're doing planning and we're doing projections and we're doing some strategizing, then it's never too early to speak to me. So if that is the case and they haven't even told their spouse they want a divorce yet, or they, haven't even done anything regarding any of the financial aspect of the divorce, it could be years. And I have helped people through their divorce and stayed in touch with them because it is a fluid these are fluid kind of decisions that you're making, right? Because you may think one thing at the beginning of how you want it to go. And then when you make the offer, your spouse may not be in agreement with what you are thinking that you want to do. And so it's a negotiation. And then throw on the top of that, if you end up litigating your divorce and it ends up going for, ever. Um, a lot of times decisions change, support payments change, how people are going to receive income is going to change. So it is an ongoing process, and it's one that a lot of times people really rely on me to help them through. And I don't have a problem with that at all. I appreciate that. And it gives me a sense of satisfaction to see things all the way to the end. So,
Yeah, it's obviously a very intensive process, and it's wonderful that you're there for them, that you're another person in their support group that they can rely on.
yeah.
Now, what do you think people are doing wrong in their divorces? What advice would you give them from your perspective that what they should be doing?
Taking counterproductive positions on things, being emotional about their decisions rather than looking at it from a financial perspective. Now, I know divorce is very emotional, right? I'm not discrediting that, but you really could, if you can stand outside of the emotion and not take counterproductive positions because you think you're going to win something or you think that you're going to make something, some type of bad behavior right because of the position you're making, you're going to save yourself an enormous amount of legal fees, not to mention the ability to get through the divorce in a quicker manner, right? Because you're coming up with some options that make financial sense for both parties and coming up with options that both sides can agree to or can at least start from a position of that it makes sense financially is going to help you move through the divorce faster. So I just think coming up with options and knowing what those are early on is going to set you up for success when you go to the negotiation table and you say, look, I've talked to a lender. This is what I propose. This is how I propose it. This is what I think I can carry out. This is the timeline I can carry it out in. And what do you think? And if they come back and they say, well, I don't like this part or that part, at least you've started from a place of something that can actually be carried out and be done appropriately.
Right. Being prepared, having realistic goals, and going in
Right.
with clear eyes. Yeah.
Absolutely.
Now I want to talk about assets and real property division. Can you tell me what a home buyout is?
Yeah. So, I'm going to use really simplistic numbers here, but typically, the way it's calculated is the agreed upon value of the home, and that can be done several ways. Let's just, for our conversation, say it's 500,000. You've agreed that the house is worth 500,000, and you can get an appraisal done. You can, Mr. Zillow hasn't been in your house, so that's probably not the best way to figure out what the value of the house is. But let's say it's 500,000 and you owe 200,000 on the mortgage. So the difference between the two is 300,000. That's the asset. That's what you're negotiating when you're going through a divorce. That 300,000, not the house itself. So you have to accomplish two things. You have to pay your spouse their portion of that equity. So if it's 300,000, it'd be 150 is theirs, 150 is yours, right? Just from really easy math. So a buyout would be you're taking that 150 that you owe your spouse that's leaving the home, and you're coming up with a way to pay them. Now that can be done through other assets, because all of your assets, all your marital assets are going on what they call your marital balance sheet. I call it a bucket of assets when I'm talking to clients. So let's just put all these bucket of assets in, assets in a bucket, equity, retirement, bank accounts, stock accounts, everything's going in this bucket, and you're going to start dividing them. So if you owe 150, you can say, well, I'm going to take 150 less of my portion of the retirement plan in exchange for the equity. That might not be the best financial decision, right? But it's still, you're buying it out through other assets. Or you can say, I'm going to do a new mortgage. It's going to be for 200,000 to pay off the current mortgage plus the 150. My new mortgage is going to be for 350,000. What the lender then does is they wire the 150,000 or cashier's check, whatever your spouse prefers, and in exchange for their equity. So you're wiring money in exchange for equity. Your spouse that's leaving the home is going to sign a deed. It's called a quitclaim deed in most states. That deed is they're exchanging their ownership for the house, right? So exchanging money for the deed. You're giving them their portion of the equity. You in turn own the house outright. Now you still have your 150 of equity, right, in the house, because now you owe 350 against the $500,000 value, and they have their money and they go on and they're able to do what they need to do. So there's many different ways, and it's not an all or nothing. It can be customized to whatever you qualify for, whatever you're comfortable with from a post-divorce budget perspective. Maybe the 150 rolling it in is just too much for your budget. So maybe you roll in, let's say, 75,000 and take 75,000 less of your portion of the retirement plan or some version of that. And working with a financial advisor or a CDFA and myself is really a good fit, because I'm not here to tell you what that exchange should be, right? But only to tell you what you qualify for. Does it make sense from a budget perspective? What does that new mortgage payment look like? And what's a really good kind of option if your spouse needs money to go buy their own house? Is that the only place to get cash from, right? It might be, or there might not be a lot of other assets, right? The house may be one of the biggest assets, and it may be something where they want to go buy their own house. This is the only place to get the cash. You're comfortable with the new mortgage payment. What does that new mortgage payment look like? And is that going to move the negotiations forward? So hopefully that answered your question. It was a very long answer, but
No, that was great. When thinking about budgeting, how does debt, income, and other factors affect buyouts?
Yes, that's a very good question. a lot of times in a marriage, we also have joint debts, right? We have credit cards together that we might be an authorized user. We have car loans that we may have taken out together. We have things. And so when I'm doing the planning, I actually pull a credit report or a soft pull. We call it a soft pull because it's not a hard inquiry on your credit, but it allows me to see what the current liabilities are today, right? And we go through those and we say, okay, this is my spouse's car loan. They're going to take that with them, right? They're going to take the car as well as the payment. So I'm not going to be responsible. As a lender, if I have a divorce decree or a settlement agreement that states specifically that that car loan is assigned, we call it, oh, what's the term, Libby, that I just blanked out as to what. Anyways, we assign the debt, right, to the spouse, and I have that specifically spelled out on your settlement agreement, contingent liability. Thank you. It's a contingent liability, and we can eliminate that from your debt to income ratios. So as long as it's spelled out specifically, oh, that's my spouse's car payment, they're going to take that with them so that I don't have to use that against you in your debt to income ratio. So we're going to look at all the liabilities on your credit report. So we can be strategic about that too. Hey, especially when it comes to children's student loans or things that, may make a difference. We need to look at all of those obligations for you and what they're going to be post-divorce so that you can carry out what you set out to do. And if it means assigning a debt to your spouse, and that makes sense from the total picture, then it can make for a better outcome overall because you know that you can qualify for it if you just have this car payment that's no longer going to be your obligation.
Right. Now, do you need to be officially divorced to move forward with buyout?
No, you do not need to be officially divorced if there is no filing. And a lot of times in the cases that I do, there is no filing until the end. They're collaborative divorces, they're mediated divorces. There's a lot of agreements that are being made prior to there being a divorce filing. So in that case, you can do a buyout prior to being divorced. You have to understand in some states there's what's called homestead rights. And if there's a new mortgage being taken out on a piece of real estate, your spouse is leaving the home that's going to sign the deed may have to sign some of those documents waiving their homestead rights. So they may have to be involved in the transaction. If a divorce is and I do those all the time, where people need the cash, they want to go buy, they don't want to be divorced first. There's no reason, but there are some things that need to happen in that situation. And so pre-planning is really important to be able to see if you can carry it out from a debt to income perspective and all of the things that go into play. And you kind of have to be somewhat, I use the term amicable loosely because if you're getting a divorce, you're probably not singing kumbaya like by a campfire, right? But sometimes do have the ability to talk about finances and how we're going to move forward in reasonable conversations, and that needs to happen if there's a buyout prior to a divorce.
How do prenups affect buyouts in asset divisions or separation agreements?
Well, in a prenup, typically you're already agreeing to how you're going to divide the real estate, right? There's no ambiguity about what the numbers are going to be. And I think that a lot of times, especially over the last 5 years, where equity has grown significantly across the country and people are looking at a significant amount of equity in their homes being some of the largest assets. And if you've already agreed to how things are going to be divided, there's already an agreement in place, and you don't have to make there's no further discussion about it. It's just carried out the way that you initially agreed. And I think that that can create a smoother process, right? Because you're agreeing to things before there's a lot of um, animosity or, conflict and I tell people all the time that want to stay on a piece of real estate together post divorce, because they want to keep the interest rate that they are in love with, right? We call it the golden handcuffs because over the last 5 years, people got a mortgage in 2020, 2021. They have a really good interest rate. So they say, well, can't I just keep it? And I say, well, you can, sure, if you can agree to it, but you're going to be business partners and own a piece of real estate together. And that's very different than being a married couple and owning a piece of real estate together. Title is held different, right? And all the agreements, what's going to happen if a tree falls on the house post divorce, who's going to take care of it? All of those things need to be spelled out. So there's a lot of forecasting that needs to happen, and a lot of agreements that need to happen. So just like with a prenup, you are making these agreements when you're probably in a good place and not at the end when things are going sideways and you're hurt and you're angry and you're all those things.
From everything you've seen in your career, how can someone have a financially successful divorce?
I thinking I think that's a great question. I think being reasonable with the outcome and not thinking that the court system is going to right some of the bad behavior in a marriage, right? I have people coming to me all the time and think that they can keep the house because their spouse did something bad to them, right?
Mhm.
And that's just not the way the courts work. So if you can understand the laws in your state and really come to the negotiation table and realize that's where you are, and it's really a financial decision, right? And coming up with reasonable ways to split the assets that you both have accumulated over your marriage, regardless of whose name is on the account. It doesn't matter. You see a lot of times where people say it's my retirement just because their name's on it, just because they've accumulated it in an account because their employer set it up for them, a 401k or something, and it has their name on it, doesn't mean it's theirs. And when you understand that, and you understand that you're coming to the table and dividing all of your marital assets in a divorce, it could make for a much smoother process and a much quicker and more economical process as well.
Well, thank you. That is some great advice. And I want to thank you for your time today. But before you go, if listeners are interested in connecting with you, what's the best way to reach you?
So I have two URLs that I think people can go to. One is iwantthehouse.com, and the other one is takeorleavethehouse.com. And both of them will get you onto my calendar if you want to schedule time with me. And the I Want the House will have an ebook that's attached to it that gives really good guidance and information.
Excellent. And I will include those in the show notes so people can get to your website right there. Well, thank you
Thanks.
so much for speaking with me today.
It's been a pleasure, Libby. Thank you so much for having me.
That's our show, folks. Thank you for listening to our Prenup Lawyer. Make sure to like and subscribe, and feel free to drop a comment below. Follow us on Instagram at Our Prenup Lawyer, and listen to us on Spotify, iHeart, Apple Podcasts, Audible, and watch us on YouTube. See you guys next time.